Part two of the weekly stock market update. Let's look at the S&P 500 and dive into where we are. All-time highs, of course, very similar in picture to what we saw in January and what we've seen in January of 2022 as well, which begs the question, are we going to get a deeper fall or are we going to get a V-shaped? A fall is due on the cards. There is a slimmer possibility that we keep going up and up and up in this direction. September is not generally a good month. So on the issue of buy, hold and sell, what would you do? Well, I don't think you've got cause to sell yet because you haven't seen the moving averages of the prices falling yet, so there's no need to worry about that today. What about holding? Well, if you already own it, you, like I do, you would hold it. And what about buying now? You'd buy cautiously because you are well aware it is somewhat overbought. If in doubt, you would well leave it out. So if we then move on to some other interesting points that I wanted to make. History shows bull markets last far longer than bear markets, which is another reason why you might want to edge into the S&P and then buy and hold it for a prolonged period of time. I know trading is tempting. Try and steer clear of that temptation because you are bound to mess it up. By the way, you can also find me on YouTube, 250,000 subscribers now as of August the 21st. My YouTube channel, apishpatel.com/links. You'll find it on there. Wednesday, biggest announcement after market close. You have got Nvidia earnings. That's the only major market moving earnings announcement this week. The rest of them are over there. The past week, well, interestingly, the one sector which had been doing poorly over the last few weeks has been doing well, and everything else has been doing fairly poorly. Okay, you've got Salesforce up there a bit, which I know in software applications, one or two other companies. It's in the public domain. I've been saying it for weeks. You already know I own JP Morgan, Goldman Sachs. The clients know the full holdings that I have, but I just wanted to share with you 1 week's noise does not bother me. How about the past year? How's it been? Incredibly cheap for Apple because all the profits it's made during the year have gone into its balance sheet from its profit and loss account and therefore made that company's price to book ratio, the preferred valuation metric of Warren Buffett, even cheaper. Well done you at Apple, but price movements are not in and of themselves, or valuations indeed, the basis on which you can judge future price movements. We know this from the academic research and so on, and therefore we look at more than just those factors, such as revenue growth we look at, dividend yields we look at, consistency of past performance we look at, which can be a good proxy for whether or not management will continue performing as it has done in the past. There's no guarantee that they would, but at least it's a good measure. So that's how the year has gone